welcome to my channel. Today I'm going to talk about the stock accounting update today. Today my stock account has made a loss of $280 US. US stocks closed lower on Tuesday as market focused on the selling talks. US tariff data in April fell short of expectations. Retail giants warned of weaker consumption. In my account today I've lost a total of $283.6. Right now, the net asset of my account is $73,036.67. Today, United Natural Gas made a loss of 1.15% to $6.86. Today, market generally closed lower, except for internet content and information, which rose for more than 2%. Dow Jones Industrial Average closed down 1.01%. Nasdaq Composite closed down 0.18%, and S&P 500 closed down 0.65%. Home Depot's earnings were disappointing. Markets are watching the progress of the U.S. debt ceiling talks. U.S. retail sales rose less than expected month-on-month in April. Several Fed officials said they have not made any decision on the June meeting. Dow component and home improvement retailer Home Depot closed down 2.2% after it announced disappointing quarterly revenue and lowered its full-year guidance. Markets are closely watching progress in the federal government's debt ceiling talks. At 3 p.m. Eastern Time on Tuesday, Biden held talks with people in Congress on the debt ceiling. The White House enters its second week of talks with Congress on the debt ceiling. If Mr. Biden is set to short his trips to Asia to counter the talks. The Treasury had already said the country could default as early as June 1st if a deal to raise the debt ceiling. Treasury Secretary Janet Yellen warned on Tuesday that the time is running out to avoid an economic disaster because the debt ceiling cannot be raised. She reiterated that the federal government's debt default could lead to an unprecedented economic and financial storm, and that the resulting impact could lead to a recession. The two sides are now sending conflicting signals about whether an agreement can be reached. Biden ended the weekend more optimistic about the ongoing negotiations, and was confident that a deal could be reached. House Speaker Kevin McCarthy said the White House was not seriously raising the debt ceiling, and there were still significant obstacles to the talks. So far, Biden has insisted that raising the debt ceiling is uncompromising. McCarthy, however, has struggled to link the debt ceiling to increase in spending costs. McCarthy said Tuesday that there has been no progress in the debt stocks since last night. Loop Capital analyst Anthony Chibuka said, We are concerned that the stock market are not fully absorbed the risk that Congress fails to reach a deal to raise the debt ceiling, which will be disastrous for the U.S. economy. J.P. Morgan Marco Kolonovic, chief market strategist and co-head of global research, warned that the U.S. debt ceiling standoff is another downside threatening the stock market outlook and could trigger a selling-off in U.S. stocks. Kolanovic said that investors should still reduce their holdings of U.S. and European stocks as the deadline for the U.S. debt default approaches, as a possible political gridlock increases the risk of a recession. If a debt crisis similar to 2011 reappears, everything that happened in the financial markets could repeat itself. While we acknowledge that this heavy sell-off in the risky assets triggered by the U.S. debt ceiling issue in August 2011 was amplified by the European debt crisis, if the debt ceiling issue remains resolved until the last minute, there will be some inevitable sell-off in risky assets. U.S. industrial output rose 0.5% month-to-month versus 0% expected and 0.4% last. Markets are also watching for the Fed's monetary policy outlook. On Tuesday, Cleveland Fed President Loretta Mester said inflation was so stubborn that it was not clear whether to raise or cut interest rates next. Chicago Fed President Goolsbee said no decision has been made for the June meeting, promising to make rate decisions before more data is wrong, hoping to bring inflation back to target without triggering a recession, seeing some bubbles in the labor market to disappear. U.S. tariff data in April fell short of expectations. Retail giants warned of weaker consumption. U.S. retail sales rose 0.4% to $686.1 billion in April from the latest data released, missing market expectations of 0.5%, down 0.7% last month and up 1.6% from a year earlier. Consumer spending accounts for more than two-thirds of the U.S. economy, and retail sales are considered an important measure of the consumer spending, also known as the tariff data. 3 U.S. stock indexes closed lower, with the Dow down 0.51%, Nasdaq down 0.08%, and the S&P 500 down 0.34%. Jones Lang LaSalle a senior research analyst figure for the First Financial Journal, said, affected by inflation, continued high fever, and regional bank turmoil, retail industry fundamentals have begun to weaken. Consumers have to downgrade to high prices, spending from non-essential consumer goods to groceries and other major necessities, due to an extra disposable income reduction. Consumers prefer discount stores and electricity. At the same time, he said, experiential consumption is still a bright spot. Another trend of consumption is the shift from goods to experience. Consumer discretionary spending decreased. In April, grocery sales rose 2.4%, 1.2% care and personal care sales by 0.9%. Auto dealers up 0.4%. Musical instruments and bookstores by 3.3% versus 0.8%, and household goods by 0.4%. On year-over-year basis, restaurant sales contributed the most, up 9.4% from a year ago. Online sales up 8.0%, and health and personal sales up 7.9%. Gas stations, electronics, and appliances were at the bottom, with the sale down 14.6% and 7.3% respectively. Respondents expect household spending to fall sharply in the coming year, reflecting a lower consumer sentiment in Americans and a potential slowdown in inflation. In the survey, consumers expect year-on-year household spending growth to fall to 5.2% in April, the lowest level since September 2021, and down 0.5 percentage points from the previous 5.7%. Specifically, households expect gasoline and food prices to rise 5.1% and 5.8%, respectively, over the next year, compared with 2.5% over the same period, the highest increase since July 2022. Home Depot reported first quarter revenue fall 4.2% to $37.26 billion, more than $1 billion below market Wall Street's estimate of $38.28 billion, the biggest deviation since 2002, and missing market expectations for two consensus quarters. Net profits for the period was $3.87 billion, down 8.5% from a year earlier. Chief Financial Officer said, consumers are delaying large home improvement projects and buying less expensive items. Home Depot lowered its earning guidance for fiscal 2023 and expects sales and comparable sales to fall by 2% to 5% this fiscal year. In addition to Home Depot, a number of big retail stocks, including Walmart and Target, will report first quarter results this week. American electricity giant Amazon in late April has warned pessimistic consumer spending outlook. The company's chief financial officer, Orsavsky, said on the conference that the economic outlook and inflation pressures continue to be a negative factor, but we believe that consumers will continue to be cautious in spending, means that our consumers will further cut the budget and focus on cost performance. While the year-on-year consumer price index growth is narrowing, prices for some core necessity, such as food and electricity, remain stubborn. Big retailers, including Walmart and Costco, especially warehouse stores, will continue to benefit from consumer budgeting. That's all I have for today. Thank you for listening, and don't forget to subscribe and like. See you next episode.